All right, guys. What's up, team? Netflix earnings today. Who are y'all ready? Netflix earnings today. We're going to do a poll right now. We're also going to get some music playing. Let me know if you can hear the music. Netflix earnings drops at 4 p.m. We're going to do a Twitter poll as well. Sorry, Pawn, I didn't even check Discord, bro. Hold on. What's up, Great Dane, Camilo, DS, Sandy, Pawn? Yeah, guys, so, man, I went to the eye doctor today. I'm trying to stay away from screen time, so if I don't answer you back on Discord or somewhere, everybody, if you're messaging me or whatever. So I went to the eye doctor. Apparently, my right eye has some type of viral infection. And so basically, some type of viral infection in my right eye. They gave me some prednisone eye drops that I'm using now. I got to take them 3 times a day. Prednisone lone acetate ophthalmic suspension 1%. They said it wasn't bacterial, but man, my right eye, this right eye right here, honestly, it's kind of scary, man. I'm not really happy about it. GNS, I see some people talking about GNS. The SPY pulling back down a little bit. What is today? What is today for Netflix? Oh, I think I spelled it wrong. Hold on. Oops. Hold on. Netflix today is Q4 earnings. I spelled it wrong. There. All right, guys. So closing on 100. Hey, what's up, Eric? Yes, sir, man. Hey, hope you're doing good, bro. Fool, man. But yeah, my eyes. GNS halted on the upside at 190s. I don't know what I'm expecting for Netflix. The earnings expectations are Netflix is expecting 46-cent profit. So honestly, pretty low EPS for Netflix expectations. Sales revenue of 7.82 billion. So 0.46 EPS. Yeah, 0.4. Okay. Netflix is expecting 0.46 earnings. We're gonna put that up on screen. All right, so 0.46 EPS and 7.82 billion in sales revenue. All right, so again, Netflix is expecting 46-cent EPS, 7.82 billion in sales revenue. This is quarter 4 earnings. Not quarter 3, it's quarter 4. I'm just glad we got some good earnings calls coming out for stocks, man. Earnings season, it's just now about to get started again. All right, calls or puts, guys. Calls or puts. Gonna make this poll pretty short. 1 hour poll. Netflix drops quarter 4. If you want to vote on the poll, we got call or put options for the poll. Yeah, third quarter equals third quarter earnings. Today is fourth quarter earnings for Netflix, actually. And again, expectations are for expectations are for 46 in EPS. Seems a little light to me, right? Again, if you want to vote on the poll, I appreciate it. Here is the Twitter link for the poll if you want to vote on it. We're also going to do a poll on YouTube as we do here. Again, if you want to vote on the poll, I appreciate it. Bullish or bearish on Netflix quarter 4 earnings report and call. Bull, bear, vote on the poll. Yeah, I hope the market kind of needs this, to be honest. It needs good action here. Yeah, options are going to be moving right now. Look at GNS just resumed. It's at 211s. All right, right now, most people are saying puts. About 78% of the asks here are saying put options on Netflix. About 22% are put or calls. Yeah, all good. Hey, Eric, man, you're the Eric that gave me those chips or those wooden logos a long time ago, man. If that's you, welcome, man. Hope you're doing good, bro. Long time, man. Hope you're doing well, man. SPY dipping down a little bit. I think if someone has a chance to beat in earnings, it's Netflix. Yeah, I mean, they're not going to be, I don't know. Their expectational number is very low. 46-cent EPS seems low for Netflix. Let's look at what Netflix had for earnings last time. All right, so Netflix, here's revenue. All right, last time Netflix did 310 EPS. So, yeah, I think Netflix has a chance to beat it. I don't think the expectation is super high, though, to be honest. Last time they did $3.10. The time before that, they did $3.20. The time before that, they did $3.53. This is going to be, if Netflix ends up showing up at expected EPS values, it's going to be their lowest EPS value in the last 3 years. Or the last 2 years. Let's see. That's 1 year, 2 year, 3 years. Yeah, so it'll be the lowest EPS value in 3 years if Netflix comes in as expected, which is 46-cent EPS. Last time was 310. The time before that was 320. The time before that was 353. And so people don't have high expectations for Netflix right now. Their EPS, again, expectation is only 46 cents, which is not very much at all. Expectations on sales revenue is 7.82 billion. So markets started to move up ahead of this. We still got about 25 minutes or so. Yeah, options are crazy, to be honest, right now, man. The price of them is just too risky for me. But yeah, to look at the graph here, again, here is the EPS graph from Netflix. Right, last time it came in at 310, time before that 320, time before that 353, time before that 133, time before that 319. So we haven't had anything even close to this since the fourth quarter of 2020, and even still, it's still over 2x what the expected number is for Netflix here. So it's interesting. We'll see if we get something good. The market is starting to bounce back. Yeah, if it's low, maybe it's an easy beat. But the real question here is that, like, what about the other nuance of it? Like, okay, if it is low expectations, then even if they do something positive, it doesn't necessarily mean they go up. You know what I mean? So I don't think it matters too much, because I think with such a low expectation, even if they beat it, people are still going to be looking at it like, well, they could be doing better. So I don't know. I think that's one of the things you have to look at it in. But you know. All right, market's dipping down. Netflix already had a big run. Last 6 months from bottom, even with consensus. Yeah, I'm not really one that likes Netflix here. I don't even have Netflix up. Here's Netflix right here. My bad, guys. My fault. Netflix is way down here at 320. So Netflix is not trending as good as the market is. The market has kind of rebounded over the last, basically since the market has kind of rebounded since about noon. You know, market started to rebound at about 11:45 noon. And it's basically been straight up since. Netflix, not so much, man. Netflix, the last 35 minutes has been a drop. So, the real question is, does Netflix bounce back from this? And I really don't know. What do you guys think? Netflix pulling back a little bit. GNS is ripping up. We can look at Tesla on the left here. We got the SPY right here as well. There's a SPY. SPY at 390s here. We got the Q that we could look at. GNS is ripping up. Here's the Q. So tech is doing, I would say it's lagging behind the market a little bit. S&P 500 is doing okay. I just bought a put option on gamble on Netflix. It's a gamble. Yeah, for sure. It certainly is. All right, on our Twitter poll, we got about 65 people saying put options, 35% saying calls. Yo, do me a favor, everybody at home, hit that like button for me real quick if you can. I appreciate it. But yeah, the financials of Netflix, I mean, this is gonna be the lowest. If it comes in as expected, it will be the lowest EPS since 2019, January of 2019 to be specific. So again, if it comes in like that, the last time we had anything even close to this, the last time the expected number was lower than it is today was January of 2019. January of 2019. And so if we come in as expected, it'll be the lowest EPS holding Netflix has had since January of 2019. And I don't think it's necessarily good. I think that what might happen is, like, regardless of whether we come in good or bad, hot or miss, or below or over expectations, I think we might drop for Netflix, and I think that might drag the market down, to be honest here. Not 100% sure. I'm just speculating here. But I think if we come in, I think Netflix is already kind of high. It's at 321s. You know, again, I've talked about this morning, where look at the last, since May, since, May of 2022, we have been straight up since then. So where the PE ratio on Netflix right now, let me see what the PE ratio is. The PE ratio of Netflix is still under 30 though. So charge it as major resistance, could be a breakout, but it will take great news to break this resistance. I don't think a countdown is necessary. I mean, we can put a countdown up. I mean, the data comes out in 20 minutes. We'll make it 19. And let's see what time we're at. Yeah, so we got... That's the timer. 19 and a half minutes. Risk management, I didn't spend more than I'm willing to lose. The chart is at major resistance, could be a breakout, but yeah, I don't know. I'm kind of playing around with some futures trades. Netflix starting to flush. Also heard a lot about Exela. What's your thoughts? A lot of these are just really sketchy penny stocks that are not going to be good long-term companies. Yeah, Netflix starting to break down. It's at 320s. I don't know. Even if all right, so yeah, we're gonna make a Twitter post about this, just showing you some interesting nuance of this. If it comes in lower than expected, if it comes in as expected, which is 46 cents, it will be the lowest EPS since 2019. Wait, undo. There we go. It's starting to come down. I'm pretty sure that's right. Lowest EPS since 2019. Let me make sure. I don't think there's been any. Yeah, it's gonna be the lowest new launch since January of 2019. And Netflix is starting to break down here. SPY pull it back down a little bit. That's nice. Popping Netflix. Back up to 320s. And again, let me see what you got. We're going to check the polls in a second here. Looking at our poll numbers here. So you don't like Excella? No, I don't like any penny stocks really. Hey, what's up, John? When you lose the slot machines, yeah, it's just not a company I'm generally gonna like. Again, I don't like penny stocks, to be honest. I just don't. I think most of them are sketchy. They talk new traders who are kind of getting talked into suckers bets on really terrible companies. You know, they get them to you know, they get them to invest in these terrible penny stock companies that are almost always going to go to zero or less or worse, which is getting delisted. And, you know, they just get really stubborn with them, never sell. Most of the time they go to zero. You know, Netflix starting to come down at 320s right now. All right, guys, 38 likes. We can do better. Before the earnings drop, we need over 100 if we can. We appreciate it. All right, Netflix breaking lows here. Looks like the market is slowly kind of putting in. Also, join our newsletter here. We'll send our newsletters out to. We'll send our newsletters out to for the big live streams that we drop. And so we're getting ready to send this last one out now. Sending that one out now. Big tech is down, ad revenue is down, and we'll keep going down. Oof, I don't know, man. How do you know exact time that Netflix reported? Netflix reports at 4 p.m. All right, guys. Netflix at 320s right now. 320s. The Q is at 275.70s. Up to 321s. SPY's at 389s. One-third of households use credit cards to cover daily expenses in December. Yeah, I mean, I'm pretty sure that's probably pretty standard, though. Daily expenses can be kind of broad and vague, you know. SEC is charging Sam Bankman-Fried with defrauding investors. Netflix starting to bounce back a little bit. We'll see if it continues. Again, EPS drops pretty soon. Earnings season starting again, so we got some big earnings to play. All right, guys. Getting some drops back in Netflix again. It's kind of tanking the market some more here. Spot down to 389.40s here. So again, we were mostly like, if you look at the market, we started downtrending today. We essentially rebounded back up, held support, and now we're kind of moving like that. SPY back up here. So SPY is technically over the VWAP right here, but it's getting kind of close. We'll see if it continues. Earnings reports at 4 p.m. Eastern Standard Time. So yeah, 4 p.m. Eastern Standard Time. They're expecting 46-cent EPS and 7.82 billion in revenue. Hey, thank you, HC. I appreciate it, man. Anyone know if they report immediately after close? So here's how it goes, right? So they're gonna report it immediately at close, like right at 4 p.m. The earnings are gonna come out. Generally, at least, like most of the time, that's what happens. From that, at 6 p.m. Eastern Standard Time, it's almost 4 p.m. now. So in about 2 hours after, they report, then the earnings call is going to start. Is how it's going to go. Looking at our poll numbers here, 63% are bearish, 37% are bullish. All right, market's still coming down. SPY's still coming down here. We are in a SPY short, as you can see here. We are shorting the market right now. We're up about $150 on the short with 5 contracts. Kind of a longer-term trade. Anticipating a breakdown here. This is a big, important level. We'll see if we get it. Yeah, I don't mind it. It's not about looking away. Like the doctor, so it's not screen problems. Like the doctor figured it out. I went to the eye doctor again today. It's not screen problems that are causing my eye problems. My right eye has a viral infection. They gave me prednisone eye drops that I got to use 4 times a day, which I'm about to use these right now. Yeah, but they gave me prednisone eye drops that I'm supposed to use 4 times a day. Netflix is tanking here. Huge drop. Yeah, I mean, I'm okay with this. Look at this huge drop in Netflix here. We are up about 212 on this position. We will take 2 contracts off. Lock that in. We have 3 contracts left, and we're gonna let the breakdown keep dropping here. I'm okay with this. We'll take it. I'm gonna take 1 more contract off just to lock in some more profit, and then I'm gonna hold these last 2 contracts through the actual report if I can. That way, I've locked in profit to protect myself. So if it goes against me, and Netflix does really good for earnings and it shoots up, then we're still going to be probably at least close to break even. But if it goes in my favor, then we're going to be up big. So that's what we're looking for here. But yeah, market's breaking down. Specifically, Netflix is down to 318s here. Still dropping. Nah, doctor figured it out. Netflix still falling here, man. Wow, look at Netflix's weakness, down to 317s. And yeah, I was kind of siding with everybody else on the short side. I just figured we're probably going to drop. I thought we were just a little bit too extended here, to be honest. On Netflix around lows ahead of their fourth quarter earnings report. Looking at our Twitter poll here, we did a Twitter poll as well. 55 votes on Twitter. 62% said puts, 38% said calls. Bouncing up a little bit here, but the market's still dropping again here, man. Wow. All right, guys, we got 5 minutes before the actual earnings report. Wayfair. What other big earnings here do we have? Let me look. So we got the schedule here. So next week, I know we have. Next week, I know we got PPG Industries. We got Ocean First. Not any big ones aside from that. SVB Financial. So nothing really big today. Tomorrow, I don't think we have anything either. We got Ally in the morning. Next week, we've got nothing really big. Baker Hughes is Monday. Logitech is tomorrow, next week evening. I think next week's the big week for earnings, though, right? Yeah, next week we got Johnson & Johnson in the morning. Microsoft. Okay, so we got Microsoft earnings Tuesday of next week. Man, look at the SPY still dump here. I mean, this is good for me. Like I said, I'm still holding short. Wednesday of next week, we got Boeing in the morning. Tesla in the evening. IBM in the evening. All right, so Tesla next week, Thursday, American Airlines. So we got some in the morning. In the evening, we got Intel, Visa, some other stuff. Let's see if Tesla can hold. Here's the Q on the right. And then the Monday after, that's when the big ones start. SoFi in the morning, UPS, GM, Spotify on Tuesday. AMD, Snapchat, EA. Tuesday evening, Wednesday. Man, market is still dumping at 388s. Netflix is testing lows of the day. It's right at 317s. Wednesday, we got Meta. Thursday. All right, guys, we got less than 3 minutes. So Thursday, we got Apple, Google. Friday. Nothing Friday, Monday the next week. So yeah, my earnings season starts the next couple weeks, man. Look at Netflix breaking lows ahead of this, breaking lows here. Starting to dump the market. And again, it's good for my shorts. I will take that. I am going to put it in sub-only mode, chat. So if you haven't already, hit that subscribe button. We appreciate it. Starting to break down. We're at 316.50s for Netflix, 316.50s, 316.40s. The Q is at 275, breaking down as well ahead of this here. So we're going to get ready to watch the earnings here. I'm not sure Netflix. I'm sure the market itself right now. I'm sure the E-mini is what I'm sure right now. All right, guys, less than 2 minutes. All right, Netflix is dumping down ahead of this. All right, less than a minute. Q down at 275. So tech really getting hit, guys. Less than a minute. $388.60s on the SPY. Break it down here. Netflix down. We got 40 seconds here. Netflix down at 314s. Absolutely getting destroyed right now for Netflix. Absolutely destroyed. 30 seconds. Yeah, subscribe, guys, if you haven't already. Down to 314. Testing that 314 level, 20 seconds here. Yeah, it looks like this short was the right move. We'll see what the earnings show up as, but Netflix is getting destroyed ahead of it. All right, here's the earnings report. All right, timer is done. All right, there's the earnings report. Let's wait for the actual report to drop here. We can watch Netflix in after hours. Testing the lows currently. I'm not seeing them out yet. Oh, wait. Yeah, Netflix isn't out yet. Netflix on a move up. Okay, so they're out. Netflix earnings are out. And it looks like they did better than expected here. Up to 324s. CEO Reed Hastings is going to step down and appoint Peters as co-CEO. Waiting for everything to update. Fourth quarter net revenue of 55.3 million. Fourth quarter revenue of 7.85 billion. 7.7 million subscribers in the fourth quarter. EPS of 12 cents. EPS of 12 cents here. Does not compare to the 44-cent estimate. Sales of 7.85 billion. So a miss in EPS, a beat in sales revenue. We're going to put the data up on screen. This is data right there. EPS 12 cents. Miss in sales revenue, or beat in sales revenue, miss in EPS. Luckily, we scaled out of most of the trade that we were in. I'm going to give it a little bit of time. I've got about nine minutes until I have to cut this. Yeah, the actual earnings report will be interesting too, but earnings report doesn't drop for a couple hours. But Netflix is actually pushing up here. The Q's pushing up with it. So I don't know if we're going to get the type of reversal I'm looking for. I'm just going to go ahead and lock this in, I think. Yeah, we're flat. Not a bad day for me here. We also got, so their EPS was way worse than expected. This was the lowest EPS report. We're going to put some stuff about them out. I think they released here. So Netflix co-founder Reed Hastings is going to leave the role as co-CEO and become executive chairman. Fourth quarter global streaming paid memberships came in at 230.75 million. 230.75 million. First quarter revenue came in at 8.17. We're going to put all this stuff up in chat so you can see it. Fourth quarter operating income came in at 550 million. First quarter EPS came very high at 282 for guidance numbers for first quarter EPS. So that's guidance. Fourth quarter global paid additions at 7.66 million. First quarter EPS 282 versus 297 estimate. So even though like everybody's expecting positives here, their EPS came in a little bit lighter than expected. It's higher than, of course, right now. Right now, they came in at 13-cent profit EPS, which is very low. Fourth quarter global streaming paid net additions came in at 7.66 million. Total global streaming paid memberships came in at 230.8 million. Fourth quarter global streaming paid net additions, EPS 282 on revenue 8.17. 296 a share was what was expected. 815, 8.15 billion was expected on the other side of that. So guidance was worse than expected, but higher than what they came in for this EPS. So guidance was worse than expected, actually. Guidance came in at first quarter EPS here. This is their guidance right here. I'm going to put it up in chat. That's their guidance right there. That's their guidance right there. So it came in worse than expected. Yeah, it came in worse than expected. First quarter operating income guidance is 1.63. Like I said, Reed Hastings is going to become executive chairman instead of co-CEO. First quarter net of 1.28 billion. Netflix is doing great. I mean, it's moving back up some. Luckily, I cut my short position. We ended up making money on it. Like we were when the EPS dropped, or when the earnings dropped, we were up like 120 on the last few, and we ended up only making about 50 from it because Netflix pushed up. But we still made money on it, which is good. That's the goal, is just to make money on it. Yeah, big beat here for sales revenue. It wasn't a big beat, actually, though. I'm sorry. They only beat on one thing, which was sales revenue. EPS came in, about 25% of what they expected. And just to put this into perspective, EPS is a gauge on profitability. So profitability, in terms of profitability, they were about 25% as profitable as they initially expected. They expected 46 cents. They showed 16 cents or something like that, right? So that's about 25% of what they expected. So way worse than expected profitability, which is EPS. Sales revenue did come in higher than expected. So sales revenue came in at 7.85 billion, which beat the 7.84 billion as well. So sales, I'm not sure why they're up right now. The only thing I can think they're up is because they're firing your boy Reed Hastings, but I'm not sure any other reason they're up. I'm really not sure, because again, sales revenue came in slightly better by 0.1 billion better than expected, 7.85 versus 7.84. Fourth quarter EPS came in at 12 cents EPS on 44 cents estimates. So, they came in, almost 25% less than expected in terms of EPS. So that's not good. The market's kind of turning here. I should have held this, it looks like. So I guess it's being interpreted as a good thing, but yeah, that's kind of what's going on. Is like, okay, so EPS, they missed. Big miss for EPS. Big miss, right? Sales revenue, they did slightly better by 0.1 billion, but it was just slightly. It wasn't like a huge beat on sales revenue. Their guidance numbers, most of the guidance numbers I'm seeing came in lower than expected. Like first quarter EPS, they expected 297, they showed 282. So less than expected on guidance. Revenue guidance numbers came in slightly better than expected at 8.17 billion versus 8.15 billion expected. So slightly better guidance in terms of sales revenue. Fourth quarter globing, let me see any other guidance. First quarter operating income guidance is 1.63 billion. So it's not bad, but yeah, I don't know. I would call this an overreaction on the upside. In my personal subjective opinion, I think it's an overreaction on the upside. Maybe not. Again, to me, it seemed like, they're a little bit extended on the upside relative to what actually showed up in terms of EPS. They missed on EPS. They slightly beat sales revenue. Their guidance came in lower than expected. It's a pretty mixed result for Netflix. Maybe the firing of Reed Hastings, or not the firing, but he's quote unquote stepping down. Maybe that is causing them to, like it. I don't know, but that's the only way I could really interpret this is for whatever reason, Netflix moved up on this earnings report. It's one of the reasons y'all just be careful taking any big polarized positions in the earnings, because you don't know what's going to happen. By all things considered, EPS came in 25% of what was expected. And so, depending on how you look at it, came in almost 4 times worse than expected. They expected 46, 45, 44. They showed up as 12, right? That's pretty low. That's pretty low. So yeah, so it's pretty low. It's almost exactly 25% of what they expected. 75% worse than expected. New CEO was worse than Hastings, yeah. Yeah, guidance is interesting as well. I mean, even if we look at guidance, though, right? And I'm trying to say good things about it. But, like, even if we look at guidance, first quarter EPS guidance, 282. Expected 297. So first quarter, yeah, their guidance numbers was a little bit low, in my opinion. 282. They expected 297. They're only showing 282 for guidance for the first quarter. First quarter revenue, 8.17 billion. That one is slightly better than expected at 8.15. So here's the guidance numbers again. We'll put these numbers up on screen. Here's the Netflix guidance, right? So that's the Netflix guidance right here on the bottom of the screen. Again, that's mixed results. I would call this mixed results. All right, now I got two options here, guys. I got two options. All right. I got two options here. Again, I got two options. I could keep streaming for the next hour and 50 minutes. And I don't mind doing that. I'll sit here for 2 hours and hang out with you guys. Or I could just start the new stream up, you know, in about 50 minutes and we can get ready to watch the earnings call. What do you guys think? I'll do either one. I'm down to do either one. Let me know what you guys want to do. Again, hit that subscribe button if you have not already. I certainly appreciate the love and support. I can leave the chat up. Yeah, I could leave the chat up. That's a good option, maybe. I'll be back in like an hour. Yeah, I'm gonna stream the earnings call for sure. Yeah, I'm good, Carl. I appreciate the voices of concern. I really do. Honestly, I'm not gonna say I'm happy to have a viral eye infection. I'm not gonna say I'm happy about it, but like what it does mean is that it's not screen that are hurting my eyes. Like it's not screen problems hurting my eyes. Netflix just had a big drop down to 315s. Yeah, so we can just put Netflix up here so you guys can see what it's doing. Yeah, I mean, like I said, they gave me some prednisone eye drops. We'll see if they help, man. I know what I could do. I got to work on something anyway, so I'll stick around, but I might have it muted for a little bit and hang out. So I'll chill. Yeah, option contracts definitely are influenced by earnings reports for sure. So y'all bear with me, team. Well, I got a viral eye infection. It's not about the monitor. It's more so about, like I said, it's a viral eye infection is what it is. All right, Netflix starting to bounce back up a little bit. Yeah, you're probably right. I'm gonna order some of those blue light blocking stuff to put on my monitors. All right, y'all bear with me, guys. I don't think you're gonna be able to hear me. I'm gonna. Oh damn, I muted myself. All right, guys, what's up, team? Try to give some space here. All right, Netflix pumping back down to 328s here. Let's give it some time. Again, we still got some time. Delete some programs here, man. I got a lot of programs on this computer. All right, guys. Yeah, Netflix at 327s. That should help. All right, Netflix starting to bounce back up, almost back up to 330s. Yeah, man. I mean, it's all good. Like I said, if you got to just take it slow, man. You can't take any huge positions on this stuff. All right, there we go. I see. All right, guys. So that should have been muted, right? I hope it was muted. Let me make sure. Yeah, so Netflix earnings call is about an hour and a half, give or take. Yeah, we're back. Hold on one second, guys. All right, and you see, Netflix is mostly green from this. It's not the most green. Like it could definitely be greener here, but at least it's not red. You know, again, we did have a little short position in the market, and so I'm just glad we were able to get out still slightly profitable in that trade. Let's watch this 330 level. The call is in about an hour and 30 minutes. Yeah, I know. I was intentionally muted. Spy at 389. I did good last Netflix earnings. Yeah, we'll see what they do during the earnings call. Let's see how many people were right. Uh, we had over 500 votes. 60% were bearish. 40% were bullish. Netflix has bigger implication on the greater market. Yeah, for sure. Netflix definitely influences the whole market. I think the whole market started to rebound like towards power hour. Uh, so the market started to rebound in the last couple hours, but you can see like people started to get really skeptical before the Netflix release here. So if you look at Netflix, we actually started dropping pretty profoundly under the VWAP leading into the actual earnings report. I think a lot of people were skeptical. Ahead of this. So a lot of people were bearish ahead of this report, including me. I mean, I had a short position. Luckily, like I said, my good thing is like we were up a couple $100. We profited from this drop. We started shorting on this drop, so we were up a couple hundred heading into the earnings report, and we bounced back, but we were already green enough to where it didn't matter. We lost some of the profit, but we had 5 contracts. We had 5 contracts. We ended up taking 3 of those contracts off, um, before the actual EPS or before the actual earnings report from Netflix. So we ended up taking a lot of it off ahead of it, and just kind of hung out. And once once Netflix actually dropped their report, we ended up getting out. I gave it a second to come back. I gave it a second to come back, but we just ended up cutting it and taking a small gain. Like I said, we were on the last 2 contracts, we were up like $130 heading into the report, and then after the report, we were only up like 50, which is still fine. Netflix has been pumped for months, especially by analysts upgrading. Yeah, I think again, my problem with Netflix is simple. Is that like if we look at a daily chart here, my problem with Netflix is it was down here at these lows, at 160s over the last like 8 months. This thing has bounced back so much already that I'm just really skeptical to buy that. It's just bounced back too much, frankly. It's led the market some in that regard. So it's like when I'm looking to buy stuff, I'm looking for discounts mostly, and I just didn't consider Netflix a discount. Going from 160s all the way up to 315s just didn't seem like a discount to me personally. But again, let me know what you guys think. Give me the bull argument there. I think Netflix movie content has gotten much better. Yeah, recession fears. Spy up to 389. So Spy bouncing back. See, now my eyes are itching. Netflix popping up some more here. Look, it's at 330s. It's winter and people are in more watching TV. Yeah, for sure. But I don't know if that type of stance is going to be propping them up. Again, they just dropped the lowest EPS in 3 years. So, Netflix starting to bounce back. It's at 332.80s. All right, so Netflix at 332s. I would play the music. My bad, guys. I'm just trying to work on something else here while I'm here. So it's starting to rebound a little bit here. Let's see if this bounce back continues. Spy 396 at the end of the week. The tea is a disinfectant, I think. I don't know, man. Like, yeah, I don't know what time the earnings call is at. It's at 6 p.m. Eastern Standard Time. It's in about an hour and a half. Right, so got a little pullback here. I might buy this dip on Netflix. I mean, it's already green. I'm probably gonna cut it ahead of the actual report here, but we could buy. I'm gonna buy 15 shares starting out, and we'll maybe add a little bit more to it. Not the best fill, but we might add a little bit more to it um, if we get enough, a decent enough pullback here. All right, so we got a little pullback. We could add some more to it. All right, so we got a little bit more. We're in 30 shares now of Netflix. We're not going to add more to that. That's a fairly large Netflix position. Just to put this into perspective, that'd be fine. So just to put this into perspective, Netflix is currently $333 a share. 30 shares of Netflix is about 10K. So I doubt I'm going to take more than that. We'll see though. Yeah, so we got a little pop up. We'll see if we can make some money on this. Back up to where we're close to break even. All right, so there's a move up. All right, so testing that high level here, right around my break even level. We're at 333.40s, 333.50s. We'll see if we can go green. And it's slightly green on the trade. Hopefully we can break 334. I mean, that's kind of like the resistance level. Pretty close to break even here. I mean, we're not down much. I'd really love to see this break over. Again, the earnings comes out. The earnings drops in about an hour and a half, a little bit less. All right, so there's a nice little move up with 30 shares. We'll let this work a little bit longer, see if we can hold over 334s. There we go. All right, so we just got filled on half the size. We're in about 15 shares. Made about $40 on the trade. We'll let the rest ride here. Not bad. Nice. I could take some off. I think I'm just gonna let it work though, I think. Nice. Gonna go ahead and cut a little bit more. Got 5 shares left. All right, we only got 5 shares left. Got a little pullback. Let me go ahead and unload. So we made about $50 on that trade. All right, so we might buy a little dip here. I'm still not sure if I want to buy this dip yet. I'm just trying to patiently wait it out, but we got that pullback to 334s, which I wouldn't mind taking to be honest here. Starting to bounce up. We're at 335.50s. All right, we'll see if we pop back up. I see the SPY moving back up. The SPY's about to tap the VWAP area now. Um, so again, we'll give it some time to see if it makes that move up. But again, it's at 335.30s currently. How are you guys doing today? I know a lot of people said they had put options. Let me make sure this is going to work. All right, so we did break that 336 level. All right, so we're at 336. I just think we're a little bit too extended for me to take this trade. I just think we're a little bit too extended for me personally here to take the trade up. Like I could buy the dip. We might end up moving up. Look at the SPY. SPY just broke over the volume weighted average price. It's at 389.30s here. All right, so yeah, the SPY is up to 389s. 25. So see if we hold the volume weighted average price here. I would generally buy. I'm not going to buy Netflix, but what I will do is buy the SPY here. Try to get filled on the bid. If I don't get filled, let's get the ask price is fine, I guess. We'll take 30, 45, 60 shares here on this pullback. We'll see if that ends up working. And we already made. You can see we're already up a little bit on the SPY today. I think tomorrow is an update in the markets. Why would the market try to pump based on Netflix earnings? Yeah, I mean it doesn't have to be. I'm not betting on like some super long term trade here. All right, so there's a little pullback again. We got 60 shares. I could add some more. All right, so we're pulling back a little bit. My question is, I could add up to 75 shares, or I could just wait with the 60 shares here. I think I'm going to add a little bit more. We'll take 75 if we get filled. Only if we get filled there. If we get filled there, great. Um, so we got a limit order there. I see Netflix popping back up over 36 cents or 33, 336s. I mean, so I don't know if we're actually going to get that fill like we want. but the market should pump Netflix up a little bit. Yeah, I know the music's about to come back on. Like I said, I'm working on a video kind of off stream, so that's all I'm doing here. Oh, I did get filled. Okay, so my order did get filled there. All right, 75 shares. I could add another 100 shares. Did you buy weeklies? No, I'm not buying weeklies. We'll have to look at the polls. All right, so we're right at the volume weighted average price. I am tempted to add a little bit more here. Yeah, so the next rate hike is going to be February 1st. Netflix pulling back. All right, so again, we will cut the SPY here. Like I said, we just made about $50 on Tesla. Um, we just made about $50 on Tesla, so like we're kind of playing with house money, so to speak. But I would love for this trade to go in my favor too. I'll give it some time though. I mean, I don't really have any time limit here. Bear with me. Let me check the music. All right, so Netflix tried to bounce up. I kind of like a bounce play here. Again, we're split right at the VWAP for the SPY. All right, guys. So we are split right down the middle there. All right, guys. Trying to give this some time, but again, it doesn't necessarily need to happen right now. I'll be here until the earnings call starts in about an hour and 15 minutes, and so there we go. All right, so now I can let you lovely folks listen to music. Um, it should be good, and yeah, that should work fine. All right, and we're kind of getting a little bit of a bounce play. Let me I gotta log in here. It looks like we kind of want to bounce. I might add a little bit more to this. All right, we're at 100 shares of the SPY. So again, we are now in 100 shares of the SPY. We'll see if see if we get this bounce. Like I said, we're already trading with house money. We're already green on the day, and so it doesn't matter too much. All right, so we're down a little bit. I can let you lovely, lovely people listen to music now. And let me know if you can hear it. Hold on, we'll get the music started. I'm going to go back to my old playlist too, since we got time. I've got a playlist of like literal days of music here. There we go. All right, spot dipping down. We'll cut this if it breaks under 389, I would say. All right, let's. Nike did well in 2000. Also, Daniel, love the stream. Hey, thank you, Rob. Rob, cheap subscriptions to entertainment as well for sure. Maybe Netflix and video games. Yeah. Does Netflix do a share buyback program, lower the float a little bit? I mean, it could. Netflix up to 349. Can y'all hear the music? Let me know if you can. You should be able to. So Costco authorized a $4 billion buyback program. What kind of economic data do we have next week? I'm gonna start planning for next week here. Yeah, what's up, Daniel? Also, guys, while y'all are here, check out TopStep. TopStep is a funded account program for futures. And so what I was trading on today was TopStep. You can see, like yesterday on TopStep, I made. Let's show you guys. Let's find it. Yesterday, we made about 1.8K on TopStep's funded account challenge. So we're trying to get funded on TopStep. What they do is they give you a demo. If you can hit the target on their demo, they fund you once you pass their testing, basically. And it genuinely builds you into a better trader. It helps you get better. And so if you're struggling, and you don't want to keep risking thousands of dollars trying to trade stocks or whatever, the futures market is no PDT rule, and you can get your feet wet in futures through TopStep. Here's the link if you want to check it out. We got a video kind of debuting about it today after this stream. Hey, what's up, Ali B? How you doing, brother? But yeah, to put it into perspective, Netflix had the worst earnings report in terms of EPS in 3 years. Was it at 12 cents? Let me make sure I get the number right. Wasn't it 12 cents? Okay, so yeah, Netflix came in. What was the EPS? 12-cent EPS, the lowest EPS it's had in 3 years. It's January of 2019. No, it was lower than that. Hold on. It's actually lower than that, guys. Let me look back at the real history of this. See. Okay, so Netflix just dropped their lowest report. The last time Netflix had a lower number than this, was 2016. If I'm not mistaken, I'm pretty sure I'm not. Yeah, so Netflix just dropped its lowest report since 2016. That's crazy. The guidance saved it, really here, but like. Netflix dropped its lowest EPS since 2016, which is 12 cents. The last time it dropped one at 12 cents, if you look back here, the last 12-cent EPS from Netflix, or 12 cents or less. Yeah, so the last 12 cents or less EPS came in at 2016, in October of 2016. The only other one, it did drop another exactly 12. Oh, no. That's right. So Netflix just dropped its lowest EPS since 2016. Which is kind of crazy, man. Which is kind of crazy. Again, we still got about an hour before they drop their earnings call, but yeah. And they went up from it, is the crazy thing, dude. Yeah, that's exactly right. Sub growth 7.7 million versus 4.4 expectations. All right, Netflix is still kind of moving up. All right, so look at Netflix pop up some more at 335 here. Maybe I should have bought it at 335. All right, guys. So Netflix just popped up. Let's see if it drags up by. I'm still in the SPY with 100 shares right now. So 100 shares in the SPY. Let's see if we bounce back. I mean, we certainly could. All right, Netflix with a little pullback. Now the SPY is now over the volume weighted average price. I could add more to this. I don't know if I'm going to. I don't think I'm going to. I don't think I need to. Yeah, we got about an hour. All right, so again, SPY is back over volume weighted average price here. All right, we're gonna get ready for their actual earnings call, which is in about an hour. Netflix is I don't know, man. Like I said, if their sub growth really more than doubled, we're about break even now on our SPY trade, which is good. If their sub growth almost doubled, then that's good. Y'all can hear the music, right? Just I want to make sure y'all can hear the music here. All right, so again, we're back up over this on the SPY. Starting to move up. Should I add more? I like this fact that we're over the VWAP here. I don't know if I should add more to this, though. I can figure my 389.23s. I'm gonna add one more lot out. I mean, listen, the only thing I can really describe is like y'all might see me add more to this. When you have the buying power to be able to like improve your average on really small micro fluctuations of price, it's very easy to do so. And you know, by tightening your risk from that, even if it goes against me, I'm still gonna be fine. And so I guess that's what the goal of this is you tighten your risk a little bit, you can fix your average some. We'll give it some time though. I don't really like that pullback. Let me pull the chat up here. I'm guessing I don't have to use the allergy eye drops the doctor gave me, huh? Probably unnecessary though, right? How they add more subs but less revenue than last earnings. Then they add the ad business or the ad model where you can pay less but have ads, kind of like Hulu. Right? All right, I don't know if I like this, so I think I'm going to cut this real quick. I don't like that move at all. We're going to get out for relatively break even there. And let the... Netflix started to move back up. Man, there's got to be some way. Settings. There we go. That's probably better. All right, so we got little pop up again. I'm just gonna let this hang out, man. I don't need to. All right, moving back up a little bit, 389s. All right, guys, we got about an hour. What do you think about Tesla on the 25th? Yeah, we're gonna stream that as well, like we always do. I really don't know what we're gonna get for that though. I'm gonna stream that live like we always do. But as for like what I think Tesla's gonna show, I don't know. I think we could see two different things happen. We could see. Let me see what Tesla's last few reports showed. I think that's gonna be what tells the story of it. All right, so Tesla has a big influx of EPS here. So like here's Tesla, right? So here is the quarterly report, 95 was their last EPS, 65. So Tesla hasn't had like a super impressive EPS run. Prior to that, they were losing money. So Tesla's really only been consistently making money since when was this? September of 2019. They haven't really been making money since 2019. So they're almost up to $1 per share, but I don't know. What are the expected numbers for Tesla? I guess is the real question here. Like, what are they expecting now? Let me look. All right, so Tesla expectations here for the 25th are. Is Tesla earnings even confirmed for the 25th? Oh, wait. Let me look at this. Yeah, so Tesla expectations are 119. So when we compare that to what they were, 119 is what's expected here, which is higher than they've been basically ever. Now, if Tesla does do that, I think obviously if they beat expectations, then that's going to really help sentiment. 119 is higher than they've ever been. So again, I'm not saying that's what they're going to do, but it's one of the kind of nuances to watch for. If they do it, then again, it'll be better than they've ever done before. At the same time, though, for a company that's been split a lot and has that big of a market cap and to be that price with all that considered, that's not like ridiculously high either, though. No, I don't stream all day long. I'm only streaming now because we got the Nflx earnings call in about an hour. So yeah, we're only streaming now because we got the earnings call in about an hour. We'll stream the full earnings call once it starts. All right, guys. So, like I said, I'm just kind of hanging out right now. Netflix pulling back down to 335s. I get a little bounce at 335. Netflix has been basically purely sideways. If we look at this, do I buy it? I'm not saying that. I play charts and I see resistance in this area. Netflix waiting on the call. Yeah, for sure. We're just kind of hanging out waiting for the call to start. All right, so SPY just dipped at 389s. I make a living trading and I'm sidelining. Why are you buying when you say the report isn't good? I'm not really buying. I didn't say the report wasn't good. I said their EPS was the lowest it's been since 2016. But again, their subscriber rate went up. That's why they're up. It's because their sub rate went up, you know. Their sub rate was what? What was the expected subscriber rate? Let me see. It was almost too much. It was almost 2x what they thought it was going to be. That's why Netflix went up. Somebody said it earlier, and I think they're right, which is that the subscriber rate was 2x what it was supposed to be, right? Somebody give me that number. 4.5 million. What were they expecting? Yeah, it came in at 7.66 million additions when they were expecting 4.5 million. So that's much better than expected, you know. So not quite, you know, 8 million would be, or 9 million would be 2x, but still solid, you know. Netflix is removing some numbers in the future, but it's the only reason. I mean, I think that's good. Call one last rate hike, I think. Maybe. All right, so market, you see the market falling back down some here. Netflix at 335.10s. Market's pulling back a little bit. Let's see what else is dragging the market down. There's Netflix on the left. We can look at the Q here. Q is mostly sideways too. We're at 276 for the Q. And again, we'll stream the full call live right here. You see Disney going up with Netflix? Oof. That's a tougher one. I really don't know. I think Disney is a little bit extended on the upside for me personally. Disney at 102s. They didn't drop their earnings report, did they? That's a lot of volatility in after hours for Disney. Disney doesn't usually move this much in after hours. Is there any reason? I guess they're just moving with Netflix since they're both streaming partners. I don't know if they're partners, but they're both streaming services, so maybe there's some sympathy there. But still odd. Let's see if Disney had any news that came out for it. No, not really. All right, so yeah, Disney, I guess it's just sympathy moves because they're both streaming partners with it. Makes sense. Yeah, Disney's my favorite stock to swing trade. I mean, Disney, again, people hate on me for whatever reason. I think what happens with Disney is like people dislike Disney for whatever reason, politics, whatever reason they dislike Disney, right? And so that makes them underestimate how strong Disney actually is in terms of like what they own, what their acquisitions have been. That are really producing money, how much money they make, like the diversification of their holdings and like the business model as a whole. I think you can't underestimate Disney. I think Disney's a powerhouse, man. They make so much money. And so when Disney the PE ratio of Disney starts to get low, when Disney starts to dip here, my favorite area to buy Disney, and I've been doing this for 6 months now, my favorite area to buy Disney really is right around $90 right here. I'll start adding down here, $90, low 90s. I'll start to take some positions in Disney, and every time I get somebody mad, hating on me, whatever, but every single time, last time people called me a clown, they said, bro, you're a clown, you bought Disney at 90, at 88s, at 89s and 90s. But when Disney bounces back to $100 a share, it's just kind of quiet, and so Disney just makes so much money. Like they're just one of the easiest buys. Long term, especially, Disney's going to make money. Now, are there risks? Maybe, but like, I don't know. Disney's just a powerhouse. My favorite stock to swing trade by far. Yeah, ESPN. And how have you done with that, Ali B? I bet you've done pretty solid, right? I don't want anybody to copy me though. But like, if you have been copying my blue chip buys for the last 6 months, I'm making money on damn near all of them. And so again, like, hey, I'm happy about it, but I don't want anybody to copy me. Not an investment professional, not liable if you lose. Always make your own assessment, trade responsibly. I really don't want you to copy me. I might be wildly wrong about everything, but yeah, for sure. The trade, the style of trading is what you can copy. You can learn how I trade and copy that. That's fine. But the actual trades, nah, man, don't copy that. But of course, you like the style. Again, the trading strategy is very simple. It's honestly really, really simple. You buy you wait for big, healthy blue chip companies, low PE ratio companies. You buy the dip. You wait for healthy, low PE companies. You buy the dip. Bro, I got a dude that just went all in with a very small min raise. And I've got second pair. I don't have top pair. I've got second pair. It's a tough call, man. It really is. I mean, I'm probably going to fold. But, like, I kind of feel like making a hero call here. But I think I'm just going to fold. But I'm almost certain it's a bluff, but like that's all right. Yeah, you wait for healthy high PE or low PE blue chips. You wait. You stay patient is what you do. You just stay patient, man. It's really all it takes. You're just patient. You stay patient. You wait for them to have big extensions on the downside. You wait for big drops essentially on the downside. You buy them when they're cheap. You find low PE companies that you buy when they're cheap. You sit. You hold for as long as you need to hold. And generally, they're going to be back pretty soon. Like I've done this. Every company I bought like that has come back within 2 months. Every single company I've done that to has made me money within a couple months, except for maybe a few. Like I think Intel was one I lost money on because Intel just doesn't move, bro. The PE ratio is very cheap for Intel, but Intel just doesn't move much. And as well as like Nvidia, like I think that one didn't work for a few reasons, mostly. And I can remember the ones that didn't work. Like I've done it to Disney at least 5 times over the last couple months, at least 5 times. I've done it to Snapchat. I did it with Snapchat. And Snapchat's not really the same strategy. Snapchat's a little bit different because Snapchat is more of a mid cap. And I really don't think doing it on mid caps is smart. Yeah, I just don't think doing it on mid caps is smart, but it worked on Snapchat as well. Yeah, Netflix popping up to 338. One of the most powerful poker strategies, man, when you're playing like 6 and 9 max sit and goes, is stealing blinds. And I mean, I know that's obvious, but people are so afraid to raise big. Like honestly, half the time I don't even take into consideration my hand. I take into consideration the position that I'm in and like the sizing. Oh, don't you dare! All right, cool. We chopped it up. A lot of the time I don't even look at my hand. I'll look at my hand, but most of the time I'm worried about position. But if you raise large enough, most people get scared of you in these little low stakes games, and so they just kind of avoid you and they go all in. If they go all in, they have it. You just fold. The rest of the time, you just steal away. Yeah. So Apple popping up. Is Apple popping up with Netflix here? Here's Apple. It's at 135.20s. All right, we got a couple minutes, team. So next week we got Tesla earnings data. Let me look at what other earnings reports or economic data we have. We got some economic data coming out. Apple up to 135. Next week we got PMI Tuesday, jobs claims Thursday, PCE Friday. All right, that's good. All right, Tesla pulling back to 338. I could buy it again. Like I said, I am green on the day, and we're green because we made enough money on Tesla. Yeah, February 1st is the rate hike decision. That'll be a big day where we do some stuff. All right, guys, we got about 40 minutes. About 40 minutes left. Yeah, my eyes need a break after this. We're at 338s on Netflix. Yeah, I got some blue blockers, Andrew. I really do have some blue blockers, but no, my eyes got an infection. I need a hug. I shorted Netflix. Do you see the reverse head and shoulders pattern on Tesla? I think great swing opportunity there. Should do a 50 to 70% swing. No, I don't see that, man. This is a very suspect call. This dude just went in for over 2x his stack with 10 king, queen versus ace king, bro. I'm telling you, there's some people that know these boards, bro. I'm telling you, man. There's some people that know these boards. Very strange. That dude just called over 50% of his stack with 10 queen offsuit. Makes no sense. All right, guys, we got Netflix earnings in about 30 minutes. About 30 minutes. You get conjunctivitis. Yeah, it's either conjunctivitis or choroiditis. I don't know what it is. It's a viral infection on my right eye. They've got me on prednisone eye drops. I'm not happy I have it, but like originally I thought it was just because of the screens, and so I was kind of nervous about that. But apparently that's not what it is. But yeah, it hurts, man. Oh, it's mini tournaments is what this is. It's called sit and goes. 6 and 9 max sit and goes are kind of my specialty. So it's mini tournaments. So basically, the top 3 people in these tournaments get paid. The bottom 3 don't. GNS. Yeah, somebody was talking about GNS earlier, man. GNS, look how, man, dude. I should have kept paying attention to this, dude. Look at GNS. That's crazy, dude. Look how big of a game that is, man. All right, well, we won that one. Now, Netflix still pumping up GNS, man. Absolutely crazy move here, to be honest. It's a big move. Worthless company. Yeah, you guys know me. I don't like penny stocks at all, man. I just don't like penny stocks. All right, we got 30 minutes, team. Yeah, I'm testing to see if it's even worth it for me to stream like I did today. Usually I cut Netflix and I don't stay streaming. I usually just cut it. Usually I don't last the whole day. I end up just cutting the stream and letting you guys watch the earnings call yourself. But I decided to stick around today Again, we'll see. This will depend on, or this will influence whether I decide to do this again in the future. Uh, we didn't get bad views or anything like that. It's the first earnings call we had in a while, so I didn't mind. And we got some subs for us, or at least I'm trying to push towards that 100K subs. Somebody said I was playing very profitable online poker. DOG, yeah, man. What's it called? What was it called? Black Monday? No. It wasn't Black Monday. It was Black. What was it called, man? Yeah. Nah, man. I'm not gonna throw 100 at anything, dude. Again, it's not worth it. I did that with HKD. Because I guess the only one I'm willing to do that on is like HKD. I did this with HKD, bro, and like the only reason I did it is because HKD went to like 2K randomly one day. So I bought one share of HKD to see if I could turn $30 into 2K. You know, if I did, I'd make a video about it. It'd be good. It'd be good content, right? So I did it just for that sake. But like, I don't ever think HKD is gonna bounce back. But yeah. We're green today. Barely, but green, you know. Yeah, I'm a big poker player, man. I've been playing poker for a long time. It might have been Black Friday. Let me see. Yeah, so Black Friday, April 2011. U.S. government went against 3 of the main poker sites, PokerStars, Full Tilt, and Absolute, and banned basically everybody there. And they found out really Full Tilt, like in poker terms, Full Tilt was kind of like FTX, right? Like Full Tilt poker was essentially, for those that don't understand poker, FTX, the same thing happened with a company called Full Tilt. It was really big. It was endorsed by like a lot of famous poker players like Tom Dwan, like all these different, Phil Ivey, who I consider the GOAT poker players. Phil Ivey, big poker site, really well known, endorsed by a lot of really famous players. Basically, same thing with FTX happened, where the Department of Justice raided them. They eventually found out that they didn't have enough money to cover for players, and most people that invested with them lost money. You know? Kind of what happened. But it's kind of like, yeah, I know Black Monday was. Yeah, to be honest, the whole thing is kind of sketchy. Like, I don't believe the mob is still around, you know. But like when I see like so much weirdness with like casinos, like to be honest, like what's stopping online poker right now is a rule that basically was trying to stop bookies. When was the Wire Phone Act or whatever it is? Called the Wire Act. It's an internet. The Wire Act was talking about how you can't bet on sports over the phone, and now all of a sudden they're using that to say you can't play online poker. It's just ridiculous. I mean, the problem is very similar to like the real problem with this is very similar to cannabis legalization. All right, like here's the reality of it. I don't do that, but like here's the reality of it. People are going to do it no matter what. You know, people are going to consume cannabis no matter what. Doesn't matter what you do. People are going to use it. By making it prohibited and by not letting people go to licensed dispensaries, you're pushing people into the black market. People are going to end up getting themselves in more danger and more trouble. It's going to hurt kids more. It's just going to make it worse for people than they would if they actually had, you know, legal casinos. Cannabis is a gateway drug because you got to go to an illegal drug dealer to get it. You know, eventually that guy's going to offer you some other sketchy stuff, and boom, it's a gateway drug. You know, if it was legalized and it was at a dispensary, you wouldn't have that problem. Same thing with online gambling. People are going to do it anyway. But what you're making people do is go overseas and offshore and all this stuff to do something that they're going to do regardless of its legalization status. That's my big problem with it. Like, if people are going to do it regardless of legalization, just legalize it, tax it, make money on it, is what I think we should do. But again, too many people on both of those subjects are getting lots of donations, and there's a lot of lobbying efforts against them because, with cannabis, the pharmaceutical industry and law enforcement certainly don't want it legalized because that's going to take away a lot of their revenue on both sides. Law enforcement and the prison industry and the pharmaceutical industry certainly don't want cannabis legalized. By that logic, the casinos, at least historically, the casinos might be changing, but they certainly do not want online stuff legal either. It's because they're going to lose money in that regard as well. So lobbying is what's keeping those back. And I don't know. I thought that we would have some legalization on both of those topics by now, but it is what it is. All right. Then in 20 years, I know, but that's the silly thing, Rob. Like, to be honest, what we classify as a drug, like again, people have just been fed propaganda for decades and centuries now regarding cannabis. The reality of it is, like, people consume different types of drug legally on a daily basis. What do you think coffee is? I'm drinking this right now. What do you think this is? All right, what do you think caffeine does? You drink coffee every day for 5 years and then try to stop. You're going to have withdrawal effects if you try to stop. You think that's not a drug? What about sugar? What about donuts? Like, it's not about legalizing another drug on the street. It's about having an even standard of those things that are legal. And cannabis is objectively less harmful, objectively less toxic than alcohol, certainly, than cigarettes, definitely. And so it's about having an even standard of legalization. Same thing with casinos. Like, we need to have an even standard. If people can go to the casino and do whatever, then they should be able to go online and do the same thing, as long as there's certain safeguards around it. Yeah. Yeah, we'll see. I don't think it's going to drop. I don't think the earnings report's really going to affect Netflix much at all, to be honest here. Maybe it does. I don't know, but I don't think it will. Yeah, I usually have that conversation. It's just really easy. Like, most of the time, it's like you get these people who they're like, oh, what about legalizing another drug on the street? And it's just like, come on now, man. Like, y'all don't realize that keeping it illegal is causing more harm to everybody involved. People are gonna do it anyway. Like, I'm a parent. You know what I mean? Like, people are gonna do it regardless of its legalization status. At a certain point, I think you got to say, okay, people want to consume this. It's not hurting anybody else when they do. Let's legalize it and tax it, and that'll solve some of the monetary problems we have in the country anyway. Yeah, gambling. Yeah, I mean, poker's different. Poker's the only game where you're not playing against the house. So it's the single biggest game. The real suckers bets are slot machines. The slot machines are the real suckers bets, in my opinion. Slots are what get everybody, man. Slots, the odds are just stacked against you. Everybody wants to be lucky, but Fool, man, I don't know if I'm going to sit this long next Netflix earnings. I don't know if I'm going to sit this long. This is too long. They're not all suckers bets. Poker, you can have a distinct edge in poker if you do it right. Poker is very similar to trading. Risk reward calculation, pot odds, it's the same thing. You know, variance, it's all pretty similar to trading. Everything else, unless you're counting cards in blackjack, everything else you have bad odds. Yeah, do me a favor, hit that subscribe button if you haven't already, guys. Hit the notification bell. I appreciate it. Like I said, I don't usually stick around. Netflix is, for whatever reason, Netflix has their earnings report released at 4 o'clock, right? And then they don't do their actual earnings call until 6. And so for people that want to cover Netflix, it's very hard for me to sit here for hours and cover this. You know what I mean? For whatever reason, they do it this way. I don't know why they do it this way, but they do. Yeah, it is what it is. Well, no, you got indicators in poker. You got HUDs. You can look to see what your opponent's hands are. Ideally, like the way you make money in poker is they have HUDs, right? In poker, you want to play about 15 to 25% of your hands and no limit hold them. About 15 to 25% of your hands. You want to have the top range of hands, which includes specifically like suited connectors, and the rest depends on what your table position is relative to your hand. But you want to play maybe depending on what aggressive. I'm mostly like a loose aggressive player, so I'm kind of what they call a lag player. So I'll play loose. I'll play a little bit. I'll play around 25% of hands, but a tight aggressive player might play like 15%, right? But they have HUDs that tell you how many hands the other people at the table are playing. You find somebody that's playing 60 or 70% of hands, then they have no idea what they're doing, right? And so you target those players. And when you do that, you say you open up 5 or 6 tables at a time and you target the weak players, you make money. You can make money. Yeah, but not all of them do it. Most casinos you can still count, I would say, Andrew. Counting's really simple as well. But the problem is like counting cards is going to take so much work. You're going to have to go to casino and you're going to get kicked out constantly. If for somebody like me who's in Texas, it's just not going to be worth it because we don't have enough around here, for me to go. I go for an hour, I get kicked out. I go to another one, I get kicked out. Then I got to drive, an hour to the next one? It's just not feasible. But if you're in Vegas, maybe. But if you're in like Atlantic City, probably a little bit better odds. Just you got to be in a big city with a lot of different action to be able to do it. And it's just hard to do now. It's not illegal, but the casinos can kick you out for doing it. You're going to get backed off is what they call it a lot. How do they know? Mostly through bet sizing, Ali B. So like with card counting, you want to card counting, as the name suggests, is mostly just counting the cards that have been out, dividing them by how many decks there are, and waiting for high probability plays. When I say high probability, it means the count is high, which means that the likelihood that you're going to get a face card is higher, right? When the likelihood of you getting a face cards are higher, then you should bet more, right? The way the casinos catch you, though, is they wait for you to, you say you bet $10 as your min bet, right? And then, maybe every little while you start raising that up to 100. They're going to see you raise your bets. And when they see you have calculated bet sizing where you're betting small, and then you raise your bets to a large bet, and then you go back down to small, once the count lowers, they're going to recognize that on the video monitors, and they're going to say, okay, this person's counting cards, and then they're going to kick you out. So the edge is not super profound unless you got a lot of casinos in your area that you can kind of just go from 1 to 1 to 1, you know. I don't know how to play Baccarat, Dylan. I've never played Baccarat. Yeah, there's some good documentaries on it. Like watch I think it's called Inside the Edge or something like that. Yeah, watch Inside the Edge. The documentary Inside the Edge is what it's called. Dude literally rents an RV, travels all the way across the country, hits every casino. It kind of shows you his graph, his profit graph of him doing so, but it shows you him getting kicked out too. It's really interesting. Yeah, Rounders is good. I like the movie Rounders. All right, guys. Netflix earnings call starts in about 15 minutes. I'm trying to stick around late today. I mean, we only got a couple hundred people here. I'm not saying y'all are chopped liver or anything like that. But whew. I'm so yeah, it's all good, Chris. I'm just used to not being around this long, man. No, not quite, Andrew. So really, it goes 2, 3, 4, 5, 6 are +1. 7, 8, 9 are nothing. They don't count for anything. They're essentially 0. And then 10, Jack, Queen, King, Ace are -1. In most card counting systems, that's the system. Is 2, 3, 4, 5, 6 are +1 low cards. 7, 8, 9 are nothing. You don't do anything. You just ignore those. And then 10, Jack, Queen, King, Ace are -1. Is most systems, I would say. All right, guys. Carvado. Yeah, I'm holding Carvado. I'll start talking about stocks. Like I said, man, y'all got me here for hours. I don't know what else to talk about. I'm just kind of hanging out here. Party City, man. We had some people get mad at me. I told you guys about Party City this morning. Party City is now a penny stock. If y'all didn't know, Party City is now PRTYQ is the symbol for Party City now. It's down to 12 cents. Yes, the first time I streamed a 6 p.m. call pawn, and it's probably the last, bro. I just don't like it, man. It's too late, dude. I'm having eye problems as well. It's probably not the right move to sit here. And I mean, listen, I appreciate you guys being here. We still got a couple hundred people here. That's great. Thank you guys so much. We are going to stream the Netflix earnings call, of course. But like, yeah, I just don't know if I'm going to do this again. Since I'm sticking around so long, follow me on Twitter. Here's my Twitter page. But yeah, Party City, man. Bankruptcy, all that stuff, just not doing hot. Netflix has mostly been sideways. It pumped up a little bit a few minutes ago, but and thank you, Dylan. Yeah, I wanted to see what the views would be like if I stuck around here, and they're not good enough. Everybody's at home. Yeah, it's all good. But I will say this: I'm counting time, man. I'm counting time. I'm also going to switch to these AirPods so that these headphones are probably going to die if I leave them going. They've been running for a few hours now. Yeah, it's all good, man. I'll hang out. Like I said, I mean, I'm not trying to sound. We're not going to stick around this late anymore. We'll cover all the major earnings reports like we do, but like I said, man, having Having only 180 people here, it's just not worth it to stick around for a couple hours. Yeah, we might have some. I mean, like I said, we'll probably, my guess is we'll get up to like 250 once the actual earnings call starts. Which is fine. That's cool. I mean, listen, I had fun. Made a little bit of money in poker, so it's all good, man. All right, guys, we got. Can y'all hear the music? I changed it to where you should be able to hear the music. Can y'all hear the music? Let's do a test. They got financial backing, right? Most of the time, no. I mean, sometimes they do. If you're talking about BJ, it depends on who it is. Most of the time, no. Most of the time, it's their own money. Netflix is at 338.40s. I'd be so happy if I streamed and had 180 people. I know, like I said, I'm not trying to be snooty. I'm really not. Like, I appreciate you guys. I can hear music. Okay, cool. Honestly, 200 is a lot. I mean, like I said, I've always said, if you can get 1 to 200 people there, you can make at least like 30, 40, 50K from YouTube. And so, you know, I'm not trying to say y'all are chopped liver, but usually with these earning streams, we usually hit over 1,000 at some point during the stream. Like this morning for jobless claims, we had like 1,400, you know, so 200 is good, but it's just not, again, it's all about figuring out, like with I got a wife and kids and time. So it's all about judging what's going to be a proper use of my time. And Netflix is just weird with when they schedule their earnings. Carvana, I'm holding Carvana. I'm slightly green in it, but it's basically like a really, really small trade. So I'm green in it, but very slightly green, and down today on it. My entry price for Carvana is 504 though, so like we got in Carvana really cheap. So I mean, and again, y'all want to do me a favor, check out Top Step. Top Step is a funded account program for futures. It really does help the trading here. Like, if you look at Netflix and then you look at the SPY today, it's very similar price action. Downward move, break over VWAP, pullback, down move, break over VWAP, pullback. So it's similar price action. And you can day trade. Here's the E-mini. And you see it's essentially day trading the SPY. So it's day trading the same price action. And you can day trade that in futures without restriction. You can short the market, go long in the market. To do so, and there's no PDT rule in futures. So you can essentially get exposure to stocks with day trading without PDT restrictions. Now, to do so yourself in futures, you need at least 5 to 10K, I would say. But if you want to try out futures, Top Step's a funded account program where they give you a demo, they test you. If you can pass their testing, they fund you. Regardless of whether you pass it, it builds you into a better trader. And so they are a sponsor of mine, though, so I'm definitely biased. But if you want to check them out, here is the link. We're going to get ready. We got about 10 minutes before the Netflix earnings start, so SPY moving up, though. I'm trying to look at what's moving up with it. I could look at Netflix here. It's not really Netflix. The SPY's been moving up over the last couple minutes. We can look at other tech stocks like Microsoft, Disney, Apple. No, not really. It's not really tech. Okay, so let's look at Walmart, HD. What else dropped earnings today? PPG beat. Nothing else really. Maybe bank companies beat. The dollar index. We can look at the Dixie here. All right, guys, 8 minutes. Let me get ready here. Wait, so last time Netflix streamed was 6 years ago. They might hide their streams after it's done. Let me make sure. Yeah, to find they haven't posted it yet. We're waiting for them to post it, which is weird. All right, bear with me. We're gonna get it up for you guys once they post it. SPY moving up. Here's Netflix dipping down a little bit. You could buy the dip. Yeah, I thought Netflix tanked a while back. They came out like, I don't know the purpose. Like, you can ban password sharing. I think they need to worry about just making money. I don't think that's going to help right now. All right, guys, 5 minutes. All right, Netflix just broke under 337s. I'm betting Netflix goes down after the conference call. We'll see. They could. I don't know. They might. Netflix at 337.40s. Bull trap again. Like I said, we got about 6 minutes or 4 minutes. Netflix must hide their videos once they're done. All right, guys, the SPY is still moving up. It's at 389.30, so patiently waiting. It's supposed to start at 6. That sounds desperate. Yeah, that's what I'm saying. The password sharing, I just don't think was a smart thing to even talk about. Kind of how Meta ran into growth problems because they practically have every person that can use. Yeah, I mean, at a certain point, growth isn't going to be the most like viable, because again, at a certain point, everybody has Netflix. Like they become so ingrained in culture, like culturally, that like everybody already has them. So the growth is not going to be there. They'll still make money though, and they'll still make they'll still gauge their EPS. I think at a certain point, you got to just assume that everybody's mostly got it at that point, and you can still spend money on marketing. I'm not saying slow down on that, but potentially just kind of stabilize that to where you're not trying to I think that's what a lot of companies do wrong, is like they want to just continue their growth phase. But a company like Meta, everybody already has Facebook. You could try to expand. Meta's problem is a generational problem. With Meta, like I grew up on Facebook and MySpace. Like I grew up on MySpace. MySpace had the cutthroat top 8 concept, and friends were getting mad, all that stuff. Eventually in like 2008, everybody switched to Facebook. But the reason everybody switches is because like I have children, right? When kids get old enough to use social media, they don't want to use their parents' social media platform. They want to use the newest one, and there are plenty of options for that. And so it's a generational thing where it's like people use a social media platform, they get older, have kids, their kids don't want to use that. They go with the newest one, which now is TikTok, right? YouTube will always be viable though. YouTube's very powerful. It's diversified, and it's the only thing going right now for like longer term video and live streaming. So, but still, and on actual social media platforms like Meta, people just are not going to use, like kids are not going to use their parents. They're going to find a newer and better one. So they've got about a decade long lifespan of that. And that's why Mark Zuckerberg spent so much money on the metaverse, is because he was trying to get the young people vote. He was trying to get their interest again by the metaverse. The problem he faced though is like the crypto market crashed right after he did that. So he ended up losing a lot in that. And now it's at the point now where if we look at Meta, I don't know, I'm skeptical of investing in it just because, I think there's vulnerabilities. I think there's risks. Yeah, I bought my kids 2 Oculus Quest 2 headsets last Christmas. Not this past Christmas, but the one before that. They might have used those things like 4 times tops. Never used them more than that. All right, guys, about 30 seconds. Waiting for Netflix to start. They only last about 45 minutes, so stick around. We will cover this. All right, so let's wait. Yeah, they're not live yet. We're just waiting here, guys. Yeah, we're going to play the full call, Daniel, once they do it. We're just waiting for the call to start. Netflix at 3:38 roughly right now, but yeah, we're just kind of waiting. So bear with me. We're going to get it up. They haven't started it yet. All right, here it is.
Good afternoon, and welcome to the Netflix Q4 2022 earnings interview. I'm Spencer Wong, VP of Finance, IR, Corporate Development. Joining me today are Executive Chairman Reed Hastings, Co-CEOs Ted Sarandos and Greg Peters.
Can y'all hear this?
CFO Spence Newman. Our interviewer this quarter is Jessica Reif-Ehrlich from Bank of America. As a reminder, we'll be making forward-looking statements and actual results may vary. With that, Jessica, over to you for your first question.
Thank you, and thank you so much for having me today. So, Reed, the big announcement about the management changes. Could you give us some more color on the process and how you came to this decision?
You know, Jessica, it feels like yesterday was our IPO. We were covered in red envelopes We IPO'd at about $1. Hopefully some of you have held the stock the full 21 years. And when I think of the evolution, the three of us and so many other incredible Netflix employees, to go from DVD service to streaming leader in films and television, an emerging player in games, and now to have over 230 million members. It's just, well, Jim Collins probably said it best. He calls it a good start. We've had a good start. But, you know, honestly, we dream of the whole world finding their favorite entertainment on Netflix. And we shorthand that as entertain the world. And the three of us have been working together for 15 years now, trying to figure out how do we get through this issue, that issue, how do we grow? And I couldn't be happier to complete our succession process. It really started about 10 years ago with the board, trying to think through how could this work. They both have such amazing talents and gifts, and to find a platform where they've been able to contribute is fantastic. About 2.5 years ago, we took a partial step. Ted as co-CEO, Greg as COO. We continue to just make super progress, and you know, frankly, more and more they've been leading the company. And this is acknowledging really in formal terms how we've been operating, you know, for at least the last few quarters. You know, it's just a great feeling. And when I think about the stock appreciation over the last decade, I know that they want to beat that record. And I'm all for that. I'll be executive chairman, helping them everywhere I can. But it's really theirs to lead and to do that energy and hustle and intensity that we've been doing. They're very ready. That's what's driving the timing. And so I could not be happier. So back over to you.
Thank you. Subjectively, I'll just add that this may be the smoothest transition we've seen in media for quite a while. Now, for Ted and Greg, what does this mean for Netflix? Does this signal a change in strategy or approach?
Jessica, let me start with first and foremost to thank Reed personally and professionally. He has been, and I trust will continue to be, you know, a role model, a mentor, a friend. In 22 plus years, Reed has positively changed my life in every way imaginable. And he leaves some big shoes for Greg and I to fill. Unfortunately, we have 4 feet to do it with, so that's a good thing. In so many ways, the way that Reed's been able to see around corners, that's why he's been thinking about this succession for the last decade. He generously opened up more of a co-leadership model over a decade ago for he and I, and like he said, 2.5 years ago, made it a little more formal. And in that time, delegating a lot of the day-to-day to Greg and I. And in that time, in the 2.5 years we've been working together for 15 years, Greg and I. But in the last 2.5 years, particularly, you know, we've been able to build a really trusting, respectful, and complementary partnership. In many ways, the same way I have with Reed over the years. And I really do believe that this kind of shared leadership model is going to help us to move fast and to challenge each other, to challenge the company, to raise to new heights. And I'm just incredible what we're able to do. And to your point, this is the leadership team. It's been pretty stable, and that's why this steady transition feels so steady. The stability of this team has helped us build a great foundation and a culture that can absorb complexity and change. And as you saw in this last quarter, can rise to any occasion. And Greg, I just want to say I'm thrilled to be in this with you. And Reed, we can't thank you enough.
Thanks, Ted. It's a real honor to be asked to take on this responsibility and join you as co-CEO, and frankly, a pleasure to be able to continue working with some of the most amazing leaders that I've ever had the pleasure of working with, and frankly, in my opinion, the best leadership team that Netflix has ever had. So I'll just echo Ted's comments. It's been a real fun and rewarding experience to work closely with him over the last couple years especially, and I'm tremendously proud of the partnership that we've developed and the shorthand and really how we have been able to take, you know, what are sort of a complementary set of skills and perspectives and seeing different angles to different situations. But basically, you know, at the end of the day, I've always found are ultimately motivated by the same things, which is that we want to serve our members and we want to grow our business. And that is an incredible and powerful aligning process to those different perspectives. So I'm proud of the work that we've done over 22 in the latter half, especially to get some more momentum into the business. But I'm even more excited about continuing to push that into 23 and follow, the model that Reed has always had of, continually seeking excellence and always striving to be better. So looking forward to that. And then to your specific question, Jessica, there's no big strategy shift or big culture shifts. Ted, Reed, and I have been working and sort of grinding through our individual perspectives on this for a long time. And so really we look forward to, taking things forward as we have been for the last little bit and responding to a dynamic industry and doing the changes that we think are appropriate, but we don't have a bank of changes that we've been holding for this moment. So mostly it's continuity and move forward.
Great. So this was originally for Reed, but now given the change in leadership structure, maybe for all three of you, for Reed, Ted, and Greg, one of the best quotes recently was from John Malone, who said shareholders should build a monument for Reed Hastings. John and Rupert Murdoch ran the dominant global media companies in prior decades and were one of the few media executives who've been able to see around corners. Ultimately, they both sold the bulk of their assets. Netflix is now one of the most dominant global media companies, if not the dominant. What is your view of the next 5+ years? Do you need to get bigger, stay the course?
Well, the one thing I'd point out is that what's happening now and what's going to be happening over the next couple of years is that the consumer is moving to streaming. So the way that they watch content at home, delivered to them on internet, on demand, free of the linear schedule and all those things, that is a change, a fundamental shift in the business. And you've got to be where the consumer is. And that's what we've been focused on since we started streaming, doing original content 10 years ago. But being really realizing that we really have benefited from being a customer first company and meeting the customers where they are. And we've also had this blessing of not having to unwind our traditional media business as we built into this one. So we've always been focused on the future and where the consumers are going. And I think our ability to continue to stay focused on that, because this is really, I know we've been talking about it for a long time, Jessica, but this is really in its infancy. I mean, you think about as big as we've become and all these things that are happening, and in the US, we're about 8% of TV time still. So it's an enormous amount of growth ahead, even in markets where we are very well established. So that's the key for us. And I think being able to focus on consumers first and has really been our biggest benefit. And I think it's what led us to those milestones that you just referred to. Greg?
Yeah, and Jessica, I would say, I think that translates into being bigger. And I think that means being bigger in terms of touching more members around the world, delivering them incredible entertainment. We'll see that in terms of being bigger, in terms of the amount of engagement that we can drive, the amount of hours that we're satisfying them. Be bigger in terms of the culture impact is too. I mean, you've seen, just incredible cultural impact in terms of Wednesday, Stranger Things, the ramifications that these shows have in terms of the popular culture are significant, and that's going to get bigger too. It also means bigger in terms of revenue and profit streams. So we're looking forward to those as well.
Right. So losing subs in 2022 and the market reaction or valuation reset is akin to August 2015, when Bob Iger called out the early decline of paid TV subs and the impact for Disney's ESPN. It will take a while for Disney to build ESPN Plus into a sports streaming giant. And actually, they may never replace the profitability of ESPN at that point in time. Your pivot seems more broad-based by extending genres and going to new areas, whether it's games, fitness, live, etc. Do you see any similarities or differences to that momentous inflection point, which has certainly shifted Wall Street's view from subs to profits?
I'll take a shot at that and then Ted maybe weigh in, but I think it's a fundamentally different situation. And if you look at where we're at, a significant part of what we need to go do is essentially take the core model that we've been operating, since we've been starting in streaming, and just execute it better in all dimensions. And so, whether it's, the incredible content that Bella and Scott's teams are producing constantly, how we're talking about that content through the marketing and conversation that we do, the product experiences and business model innovations that we're doing. But a lot of it really fundamentally is about executing that core model better. We're not, there's not a lot of, massive pivots away from a traditional legacy business model that we have to go figure out. We're planting some seeds, in terms of games and things like that, if we execute well, and we're excited about the progress we're seeing so far, will represent, the future potential for us in terms of growth and more profit opportunities. So that's exciting. But essentially, a lot of this is just, continue to execute the play that we've got and do it better and better.
And I don't know about the similarities, but I would say that this business is really completely about engagement, profit, and revenue. So we've got to grow all of those things, and all those things are tied to executing on the content. When the content's working, the business is working. We grow engagement, we grow revenue, we grow profit. There's an interesting thing, starting in July, and you think about from Stranger Things season 4, from the phenomena that became, and what we've been able to offer up to our members from that day forward. So they went from Stranger Things to Extraordinary Attorney Woo, which was a phenomenal success throughout Asia and in South Korea, but also built a big cult fan base in the U.S. Straight into Sea Beast, which is our biggest animated film ever. Straight into Purple Hearts and Gray Man, 2 of our most watched films ever on Netflix. And then to August, to Sandman and Never Have I Ever season 3. September, Cobra Kai season 5. Empress. Cyberpunk is this animated adaptation of a video game that's been hailed as one of the greatest of all time. Narcos Saint, another monster hit from North Korea. The Jeffrey Dahmer story, Monster, straight into Watcher, so back-to-back hits from Ryan Murphy. All Quiet on the Western Front, which just today became the most nominated non-English film in the history of BAFTAs. Only Gandhi has gotten more nominations in the history of the BAFTAs, and that's from Germany with the great Ed Berger. And then straight out of there into Enola Holmes 2, a big monster success sequel to with Billy Bobby Brown. And you look at all these things that go back and forth, and they go all the way into January now. We'll end the month with You People, Eddie Murphy, and Jonah Hill. Any outlet would kill to have any one of those months as their entire year. And it's our ability to fire on those cylinders and create hits. But more than that, create the expectation that as soon as you're done with this one, there's another one waiting for you.
So let's move on to some.
Jessica,
sorry.
may I just one thing to add? I know we went on, but I just think the analogy is kind of fundamentally different. So with ESPN and the example you gave, that was a fundamental kind of shift in the industry from 100+ million pay TV connected homes to cord cutting that's on a path down to mid to high single digit reductions in that distribution platform each year, and that's moving in that direction. So it's kind of a shrinking core distribution platform, where you see in our earnings letter, the world is shifting from linear to streaming. Even in the largest, there is no country where streaming is more than 40% of share of TV time. And in many big countries, as you saw, it's less than 5%. So it's worth less than 5%, it's less than 10%. So there's an incredible runway still in the shift from linear to streaming. And so for us, it's about growing into that shift and also obviously competing well and continuously innovating and improving. And what you saw, or what we saw and felt when we had that decline in subscribers, was really near-term limiters in growing into that big market. But the big market is still growing, as opposed to fundamentally long-term limiters in that ESPN shift that you described.
Right. So let's move on to some of the drivers of growth, both near and medium term, and start with advertising. So your advertising platform's been open only 2 months, and you've amazingly given some money back to advertisers, indicating in one way that demand is exceeding supply. The company is, you guys have consistently said you're going to crawl, walk, and run. How is the crawl stage going relative to your expectations?
Yeah, like you say, it's 2 months, and I think the hardest part is actually that first step when you're crawling, because you don't really know what exactly to expect as you get it going. And now with 2 months, it's ridiculously early, but we've learned a bunch already, I would say. So just ticking through this, I mean, I'd say first and foremost is that we were able to launch this very, very quickly, and the tech is all working, the product experience is good, and that's really testament to lots of hard work from both Microsoft and Netflix teams who worked very hard to make that happen, and it's really rewarding to see. The other, I'd say, pretty significantly fundamental thing is around engagement, and we see that engagement from ads plans users is comparable to sort of similar users on our non-ads plans. So that's really a promising indication. It means we're delivering a solid experience, and it's better than we modeled, and that's a great sort of fundamental starting point for us to work with. Furthermore, now we're seeing take rate and growth on that ads plan is solid. It's great because partly that take rate and that growth is due to incremental subscribers coming into the service because we have a lower price point. That's $6.99 in the US, 4.99 euros in Germany, to just give you two examples. And so that elasticity is a real, not only a benefit to sort of growing our ad scale and sustainability, but also to the general business. I expect to see that continue to actually grow over the year. That take rate, fits sort of within the middle of our other plans, which is another really healthy sign. It means that we've got a complementary set of offerings that are working to sort of satisfy different needs for different consumers at the right mix of features and price points. So that's quite good. Another important one, I think, for the investor community, because it came up a lot before we launched, was plan switching. We aren't seeing, as expected, much switching from high ARM subscription plans like premium into our ads plans. So the unit economics remain very good as we modeled. So these are all, really good initial sort of progress points. But I think it's, important to reiterate that, as you mentioned, we're crawling and we'd like to get to sort of, move to the walking phase. We got a lot to do to get there. So there's a bunch of technical improvements in terms of, ad delivery validation, measurement. We've got progress already on that, more to do in the next quarter or two. Targeting improvements, which will be better for consumers, more relevant advertising, better for advertisers in terms of more, value delivered, a better set of offerings, products for advertisers to buy. We got a long list of experience improvements that we know we can deliver that'll deliver more value to both subscribers and advertisers. And there's just also some nuts and bolts stuff that we are learning and improving. Just things like, how do we do a better job with Microsoft at the ad sales and operations processes? There's so much that we need to do. Both companies need to do to better serve advertisers, serve an increasing number of advertisers, and meet that demand. So we're just getting started. We're constantly improving, and we see the trajectory ahead of us. And really, our aspirations are, ultimately, successively over a period of years, to basically build, just like we have, essentially in terms of the streaming experience, the best, most effective, highest quality premium connected TV ads experience as a win for consumers and advertisers, and for us as the business.
Right.
Hey, Spence and Greg, sorry, Jessica. Spence and Greg, maybe give a little context on Hulu. Kind of, what we know about Hulu's advertising. They've had a 10-year head start, and sort of, how many years will it take us to sort of pass them in all of these key dynamics?
Greg, you want to go first, or you want me?
No, I'll hand it over to you.
All right. Let's see. I mean, Hulu, yes, they've had a long head start. They started in the ads business. They have, we would estimate, Reed, and we obviously don't know exactly, but roughly half of their membership is on the ads tier. It's a multi-billion-dollar business for them already, and that's a domestic business, US only. So lower reach, lower engagement than us. So I guess the short story there is, we have, given what we've seen and what Greg just outlined in terms of the engagement on our ad plan, the strength of the performance in terms of the monetization, kind of the unit economics, and our ability to kind of scale in a way that is even better than the kind of comparable ad-free plan, plus providing clearly choice that our members or consumers are seeking out because of the sign-up flow, that we would expect to be as large or larger over time, certainly in just our US market, and more from there. But I just want to emphasize, it's a multi-year path. So we're not going to be larger than Hulu in year one, but hopefully over the next several years, we can be at least as large. And we wouldn't be getting into this business, obviously, Reed, if it couldn't be a meaningful portion of our business. So we're over 30 billion of revenue, almost 32 billion of revenue in 2022. And we wouldn't get into a business like this if we didn't believe it could be bigger than at least 10% of our revenue, and hopefully much more over time in that mix as we grow. So that's kind of how I see it, without putting a specific guide on it.
You're committed to an upfront market spot, taking CBS's prior spot, CBS Now Paramount spot, which really indicates your long-term advertising goals of being a major advertising platform. Given this is a prime spot on a critical week for advertisers in premium video, it's amazing how quickly you just took that slot away. what's the run stage, and does, how would you, what's the time frame to get there?
Well, I think as Spence talked about it, it will be an iterative process. To your point, it does signal we have big aspirations here, and we think there's a big potential opportunity. And so, we're committed to incrementally execute against that opportunity. But, I do, just back to Spence's point, we are starting from a zero base essentially. And also, we're also starting from a history where, as a non-ads platform, we had a lot of folks who basically joined Netflix fully as non-ad subscribers. And so I think that we'll be working through that over a period of time. But again, our goal and aspiration is that this is a very meaningful and significant source of revenue and profit for us over many years to come.
So, I mean, when you think about the pool of money that you're targeting, linear, let's call it $50-60 billion business, seems like the easy money. Viewers, as you've mentioned already, viewers are shifting from streaming, to streaming from linear. So we've seen all of the, kind of eyeballs move. And so now you have basically more scale and more reach, but the digital pool is much larger. But in the past, you've made comments, the company's made comments that you can't compete with Google and Meta, or it would be incredibly difficult to compete with them. Has this changed? Has your view changed?
Not really. I would say that, initially we're competing mostly with that sort of traditional, TV advertising pool. Now, I think we can layer into that over time components of what has made digital advertising so effective. So you think about the targeting capability, the fact that we're 100% signed in, fully addressable. If you think about the growing relevance of first-party data and how we do that, those are real, big advantages that we can bring relative, certainly, to the traditional TV world. But again, the form that we have, at least, for the next couple of years, will still be in that sort of lean back, primarily in that lean back experience. And so that, lends itself to certain kinds of advertising, a certain kind of advertising goal. And a lot of the demand collection component that, a Google or a Facebook is really good at, we won't be well suited to compete with that for at least some time to come.
And Jessica, just to add to that, the good news, as you saw in the letter, is that branded video ad market that Greg talked about us focusing on is about $180 billion globally, ex China and Russia. So we got plenty to do, and a lot of opportunity ahead just in that area alone.
Yeah, no, it's an enormous opportunity, but there's also, besides advertising, there's an enormous opportunity in incremental subscribers, as you have mentioned. You're the lowest price service, at least now, you're the lowest price service. Can you frame the opportunity in terms of sub growth? How are you thinking about it?
Sure, and just to comment on lowest priced, I mean, again, we don't really think about the pricing question from a competitive perspective. Again, we're think of ourselves as a substitutable good. When you think about Wednesday, or you think about Glass Onion, these are titles you can only see on Netflix. That's extremely powerful. Scott and Bella are delivering more incredible titles that are non-substitutable in that regard. So really, we think about the pricing question as how do we offer a wide range of options for a wide range of consumer needs. We want to make that spectrum even wider as we seek to serve more, members around the world and try and deliver, appropriate value at those different price points. And we're doing a good job expanding that range. And so then you think about, so there's sort of two pools then of incremental subscribers. There's a bunch of, people around the world in countries where, we're not deeply penetrated, and we have more opportunity to go attract them. A component of that is we've got folks that are watching Netflix who aren't paying us, as part of basically borrowing somebody else's credentials. And our goal is over this year to basically work through that situation and convert many of those folks to be paid accounts, or to have the account owner pay, for them to get a Netflix subscription. But either way, we're seeking to sort of monetize the viewing value that we're delivering. And then beyond that, it's back to Spence's comment. Even our most penetrated market, we're 8% of total TV time, which is potentially a relatively narrow lens to think about the broad competitive entertainment offering. So we have huge opportunity to grow the engagement component of that several X. We feel like we can get to if we do a great job of executing across all fronts, and that represents a tremendous opportunity for more entertainment value delivered, and we believe that the revenue, flows from that in time.
Before we get to password sharing, just one last advertising question. You now have roughly a decade of producing your own IP. Any thoughts on offering a fast service over time, free advertising supported television?
Ted, do you want to take this one?
Yeah, look, we're open to all these different models that are out there right now, but we've got a lot on our plate this year, both with the paid sharing and with our launch of advertising and continuing to this slate of content that we're trying to drive to our members. So we are keeping an eye on that segment for sure.
So on the password sharing, what will drive consumers to pay $3 or $4 for sharing versus becoming a sub with their own profile? Is it affordability? Is there something else? What do you expect?
Yeah, I think there's a range of motivations for different borrowers. So, some of it is economically driven, and so part of what we're trying to do is make sure that we are being responsive to that and finding the right price points, whether in terms of a individual account or an extra member affordance. And obviously, the ad-supported plans give us the opportunity to present a lower consumer-faced pricing in those countries where we have advertising. Part of it's just what we call casual sharing, which is, people could pay, but, they don't need to. And so they're borrowing somebody's account. And so our job is to give them a little bit of a nudge and to create features that make transitioning to their own account easy and simple. So we have this basically, profile export feature, which allows you to take your viewing history and all the great recommendations with you. So, to your point, there's a range of motivations and I think a range of solutions that we'll be able to offer to land people in different places.
Can you provide any details, including the timeframe for converting borrowers to paying accounts?
Yeah, so we've been working hard at this and trying to do some sort of thoughtful experimentation and let our members really speak to us in terms of what set of solutions work for them. So that's the testing that you've seen us do over the last couple of quarters. We feel like we have gotten to a good set of features. It's the profile export that I mentioned, but there's also a bunch of account management features that we think are important to making this experience work for folks. And so we're ready to roll those out later this quarter. We'll stagger that a bit, as we work through sets of countries, but we'll really see that happen over the next couple of quarters. And I think it's worth noting that this will not be a universally popular move. So there will be current members that are unhappy with this move. We'll see a bit of a cancel reaction to that. We think of this as similar to what we see when we raise prices. So we get some increased churn associated with that for a period of time. But then generally what happens is both from the specific changes that we make, we'll see folks come on as new subscribers, essentially borrowers creating their accounts, or incremental monetization through the extra member that'll happen shortly thereafter. And then clearly our job is to continue to grow value, right? To have more amazing titles that people cannot wait to see. And so whether that's satisfying those members, to make those transitions, or winning back essentially folks who have turned off the service and bringing them back onto the service over the months and years to come.
And then
Jessica, sorry, I just maybe just because we touched on it a little bit in the letter, but just to kind of reinforce a little bit of what that looks like in terms of timing and guidance. So those dynamics that Greg just walked through, because of that, as we kind of start to roll this out later in Q1, based on the timing, what we talked about is that we'll have modest growth we expect in paid net ads in Q1, but kind of atypical seasonality where typically Q2 would be a softer paid net ad quarter. It'll probably be a larger paid net ad quarter, and most importantly, what we're most focused on is obviously revenue. That is our primary metric. And what you see is in the guide, these revenue initiatives between paid sharing, rolling out, and then scaling ads. You don't see much of that in Q1, which is why we're forecasting 8% growth, FX neutral in Q1 revenue. But throughout the course of the year, we would expect to see accelerating revenue growth as we roll out paid sharing, broadly across our business, and then obviously scale ads throughout the year, which is a more gradual build. So I just want to kind of highlight that, and that's kind of what you're seeing in the guidance.
And given the revenue drivers of paid sharing and advertising, how are you thinking about price increases in the current year? Is it just too complicated? How are you thinking about it?
Well, I would say that the two initiatives that you described represent the bulk of our pricing strategy in 23. We anticipate that they'll both be, revenue positive, revenue accretive, significantly so, according to the details that Spence just offered. Now, having said that, our core sort of pricing approach in theory remains the same, and so we're going to look, at the metrics, that our members are giving us and telling us, and look for opportunities where we've I think we've done a good job at creating more value for them. And, for a certain, customer segment in a certain tier in a certain country, we think we've, done a good job at delivering more entertainment for them. And then, we'll go back and, opportunistically ask for them to pay a little bit more so that we can sort of keep this, virtuous cycle going and really invest that back into incredible content and stories. And maybe Ted, I don't know if you want to highlight anything that you see coming on that side.
No, I would just say that, it's the must-see-ness of the content that will make the paid sharing initiative work. That will make the advertising launch work, that will make continuing to grow revenue work. And so it's across film, across television, it's the content that people must see, and that it's on Netflix gives us the ability to do that. I'm super proud of the team and their ability to keep delivering on that, month in and month out and quarter in and quarter out, and continuing to grow in all these different market segments that our consumers really care about. So that to me is core to all these initiatives working, and we've got the wind at our back on that right now.
But you amazingly continue to expand the genres of content, which, as you guys have mentioned, clearly drives engagement. But the most recent new genre, which you introduced on your platform at the very end of last month, is fitness.
Just in time
And
for your New Year's resolution, yes.
that's it. I mean, but one class online could be the price of a Netflix subscription. So, while many of the workouts are bite-sized, I mean, some are longer, they're simple but deceivingly effective.
Yeah.
Can you talk about what your plans are in this area? And, to the extent you develop more content, it really, as I said, drives value for anyone who would work out anywhere else. So how do you define success? And is there anything you could say about, partner economics with Nike?
Yeah, we can't comment on the partner economics, but I would tell you that we've historically stayed away from the fitness category because it's abundantly available online, in many cases for free, as you know. But we thought if we could partner with a great brand, and Nike is certainly a leading brand in fitness, with really well-produced content, which this content is, and then let's go out to our members and see if it's something that they value, and we'll see that in the engagement and see where we could take it from there. So I think in that way, working with a great partner and the high quality, to your point, of the content itself, we'll put a really good test. Do people want to use Netflix to get in shape or to get back in shape? And if they do, we'd like to keep serving that. And if they don't, we'll keep poking around. So it's a way we're able to test the market at a very high end with a premium brand partner.
There's constant speculation that you will experiment with sports, which is an expensive rental business, for
Yeah.
many. Does having an advertising offering change your views on offering sports? And any thoughts that on like WWE, which is for sale, that could be potentially, I'm just saying that could be owned content. Like any views on sports?
Yeah, look, I'd say, in sports, our position's been the same, which is, we really, we're not anti-sports, we're pro-profits, and we've not been able to figure out how to deliver profits in renting big league sports in our subscription model. Not to say that won't change, we'll be open to it, but that's where it's at today. And in WWE, we look at, we have a lot of M&A activity all the time. We look at all of them, but nothing we can comment on.
Right. How does churn play a role in your investments into live events? While live comedy specials seem to have a value outside of the live window, other events like you just announced that you're going to, host the SAG Awards, sports, obviously, these have fairly short, useful lives. So how do you balance the investment in live versus the potential to drive advertising dollars?
I would look at this as part of just like other crawl, walk, run scenarios where we are really looking at our content that would benefit creatively from being live. So the results show for one of our competition series that we have, or a reunion show that drives news, or like the SAG Awards, an opportunity to engage audiences live. And because we've got the shelf space, we can do hours of shoulder programming around the live event and all of those things that our members may enjoy. So there's nothing particularly novel about live television, as you know, but we are dabbling in it, starting with our Chris Rock live concert, to try to create the excitement around live for those things that are uniquely more exciting to be live.
Okay. The theatrical release of Glass Onion was incredibly successful in its limited release, but so, for some, it looks like you left a lot of money on the table by not continuing beyond that 1 week. Do you have any regrets, or, can you give us your thoughts on your evolving film strategy?
Well, put from, I'm thrilled with every aspect of the release of Glass Onion. Starting with Ryan Johnson and his great film, and Scott Stuber and the film team for bringing it to the table. And I think what you saw was a lot of excitement. We drove a ton of buzz with that theatrical release, and we created a bunch of demand. And that demand we fulfilled on our subscription service. Our core business is making movies for our members to watch on Netflix, and that's where we're really focused. And everything else is really a tactic to drive excitement and around those films.
So, when you have like a massive global hit, like a Wednesday, there seem to be so many ways you could drive monetization. I know, like for just staying with Wednesday for a second, like the Wednesday makeup was sold out in every
Yeah.
Mac store in New York City. You could
Yeah.
not buy it anywhere. Do you participate in these types of consumer products, or is it just a way to fuel fans, fuel engagement?
It's a little bit mostly to fuel engagement and fuel fandom. We do participate in it. Our owned content, we do drive a lot of revenue in our consumer products business, but mostly the motivation is to drive fandom. And Greg alluded to this earlier, but this impact on the culture that this content can have on our platform. In our earnings letter, we mentioned the Lady Gaga song that came back after 11 years because of Wednesday. But that doesn't mention the 4 songs this year that we actually jammed back into the charts. Some that never charted, and some that were off the charts for 40 years, from Metallica, Kate Bush, The Cramps. And that impact on culture, Sophia Carson's music career took off because of Purple Hearts. Jenny Ortega picked up 10 million social media followers in the first week Wednesday launched on Netflix. And all of these folks who build these gigantic careers on Netflix then go on to own their own companies, sell their own makeup in many cases, and become incredibly powerful influencers. And all of that business is drawn because of the impact that this distribution platform and this incredible UI that basically takes something like Wednesday, which was not a slam dunk for people to predict that people would love it as much as they do. And the UI can pick up on that activity in the early going of the release and push it out to where it's going to be, one of our most watched shows in our history all over the world. And we do use consumer products as a way to intensify fandom. And it could be anything from makeup from Wednesdays, you said, or maybe even a hand on your shoulder, Spence.
Yeah, you never know where Wednesday is going to show up, or at least think. I didn't get my chance to kind of talk and at the risk of going back to the management changes and say, I am thrilled with the changes. I'm going to miss maybe not seeing Reed as frequently as he's supporting Greg and Ted. So I just brought in a little bit of reinforcement with Thing, even though Reed's not going anywhere. But this way I've got a little daily reinforcement.
Sticking with content for a few minutes, the local language hits are building, but so are your US hits. How do you think about allocating your $17 billion or so content budget between genres or languages? Like, is there any way like you can kind of parse it out?
Yeah, look, it's a big task. Like, watching where viewing is growing and where it's suffering, and where we are under programming and over programming around the world is a big task of the job. Spence and his team support Bella and her team in making those allocations, figuring out between film and television, between local language and what's really interesting is there aren't that many global hits, meaning that everyone in the world watches the same thing. Squid Game was very rare in that way, and Wednesday looks like one of those too, very rare in that way. There are countries like Japan, and, as example, or even Mexico, that have a real preference for local content, even when we have our big local hits. And every once in a while, something like Squid Game is even a big hit in the U.S. So think about in Q4, we launched a top 10 non-English series nearly every week of the quarter, from South Korea, from Spain, from Colombia, from Japan, from Poland. And so the benefit of that kind of local language investment, and the benefit of doing that early, was that we become exceptional on the ground in those countries. Those content teams generate not just content people want to see, but content that's leading the industry. To have Netflix produce the Academy Award entry film for both Mexico and Germany has never happened in the history of the Oscars. It's really phenomenal. And I mentioned earlier the All Quiet on the Western Front and the success of BAFTA. And keep in mind that these investments are important because it actually increases the total addressable audience for Netflix around the world. Because if we were just doing English content for the world, we would be mostly attracting Western-centric viewers. But our addressable audience is anyone who's watching TV anywhere in the world.
Let's
Thanks, Ted. Jessica, we have time for one or two last questions. Just want to make sure
Okay.
you have a chance to
So
ask
move
about
on.
margins or anything else you might want to ask.
So let's move away from content then. So free cash flow, first of all, like what an inflection point, $1.6 billion in 22, roughly 3 billion in 23, 4 billion plus probably in 24. Can you talk about, historically you've been more build than buy. Is there any change in philosophy as cash starts accelerating? Can you talk about overall capital priorities and what's driving that operating margin increase?
Well, Spencer, why don't you go first with the capital allocation philosophy, if you like?
Sure. Thanks, Jessica. So as we wrote in the letter, no change at all to our capital structure, policy, or allocation guidance, which is to first and foremost reinvest in the core business and selective acquisitions after that. Those are the main priorities. Beyond that, if we have cash in excess of our minimum cash levels, which is roughly equates to 2 months of revenue, then we'll return that to shareholders through our share buyback program.
Yeah, and I can pick up with margins. I can start with it's a bit of an explanation, but if you like, in terms of just in the near-ish term, our outlook for 23, and then just generally what's driving our outlook. But what you saw in the letter, and it kind of dates back, frankly, if we walk back to where we were in the beginning of 2022, when we saw slowing revenue growth, we said we're going to manage to a target operating margin of 19 to 20%, FX neutral at those January 2022 rates, and we ended the year at 20%, so at the high end of that range. And now, as we kind of turn the page to 23, first I should say, with everything we talked about, we're quite optimistic in terms of our path forward. I also just want to highlight there is also a kind of short-term, unusual amount of less visibility than typical, because these things we're talking about in terms of our revenue initiatives, whether it's scaling our ads platform, launching paid sharing, which hasn't globally rolled out yet. These things are early days, and then also all multinationals have a level of macro uncertainty. So that's a bit of a caveat in terms of the variability in the forecast. But what we see is with our path to accelerating revenue growth and our high confidence there, that as we turn forward to 23, we're guiding to now 21 to 22% FX neutral operating margins. That's those same January 2022 rates. We're now in a new year, so we take it forward to January 23 to current rates, and that's a range of our operating margin guidance of 18 to 20%. So now FX neutral for 23, we're going to manage within that band to deliver at least within the 18 to 20% operating margin guide. So that is growing margins, growing absolute profit, and really what's reflected in there is that we have high confidence in our ability to accelerate revenue throughout the course of the year as we scale ads and we launch paid sharing. We've got high confidence in improving the service and the strength of our content slate with everything that Ted discussed here on the call. And we're also continuing to manage our cost structure with increasing discipline. You saw that in the back half of 22 with our slowing expense growth, and we'll carry that through similarly in 23. So that all lends itself to our focus, which is kind of healthy, growing, double-digit revenue growth and accelerating that revenue growth throughout the year, expanding both our absolute profit and profit margin, and then growing, positive free cash flow. So that's all reflected again with the big caveat that there's a bit less visibility than typical in this near term. That's something we'll continue to work through. We'll obviously know a lot more over the next few quarters as we roll out paid sharing, and we'll update guidance as appropriate. But that's what plays through, and then also plays through to that cash flow generation that you see, where we believe with all those dynamics and managing at about the same level of cash content spend, that we'll have more than at least 3 billion of free cash flow in the year.
Thank you, Spencer, for that answer, and Jessica for that last question, all your questions. And before I turn it over to Reed for closing remarks, I just wanted to say, as a longtime Netflix employee, as formerly prior to that as an analyst covering Netflix for many years, Reed, it has been a real privilege to work alongside you. And on behalf of all Netflix employees, we thank you for everything you've done for us in the company over the past 25 years. And we're all super excited for the next chapter with you as our executive chairman and Ted and Greg as our co-CEOs. So with that, over to you, Reed, to take us home.